Hey, what's up you guys, it's Adri here. Welcome back to my channel. Unfortunately today, the stock market just crashed. Many people might get scared, but stay with me in order to know what you have to do in a bear market. I'm not saying that's going to start a bear market, even though the indicators call for one. It might be a correction, it might be a collapse, it might be even a recession or depression. But one thing was proven: investing consistently during a long period of time will make you wealthy and you'll be better off. Remember this is the most important piece of advice that you will ever get from any big investor. Timing the market beats timing the market. Say after me: timing the market beats timing the market. That means you just don't have to be a trader to get rich. You just have to consistently buy in and hold positions for a long time. If you want just to cash out certain capital gains, then investing is not for you. Investing is for people who want to hold into positions for a period at least of 10 years. The long term is the best investment medium. You have to hold 10, 20, 30 years and you'll benefit from the compound interest, the snowball effect. Besides, you're going to learn the steps that you have to follow in order to get wealthy during a bear market. So let's begin. Step number 1: create a 3 to 6 month emergency fund. Now you can do this either in cash, which is really easy to be done, or you can put money in your usual bank that you use, in your savings account, or even in your checking account. This way you're going to be released of the stress of being forced to sell during a market drop, like yesterday happened, like the one of today. Step number 2: don't panic sell. That's one of the biggest mistakes ever, because once you start investing, you cannot go back. You have to keep investing. So that leads us. Step 3: don't FOMO buy. FOMO buying is translated as fear of missing out. You don't have to be afraid that you're going to lose. Opportunities come and go all the time. This is how Mr. Market acts usually. So the market can be highly irrational over a year. But what you can do is to, number 4, diversify your investments. This way you are going to diminish the risk, and you're going to do this by spreading your money through different sources of income, such as dividends, stocks, bonds, real estate. Invest in your business if the current drop in the market is actually an incentive for you. This is the approach I've taken. I don't sell and I keep buying in according to my strategy. I don't forget about my strategy or my plan when it comes to investments. I have to stick to it. I made my rules, I have to play by them. Furthermore, you have to keep a steady source of income, because when the market drops, this is highly associated with job loss, unfortunately. So we have to be realistic. We have to have multiple sources of income in order to not be in distress when such situations appear. Lastly, I have to mention a disclaimer statement here, because if you're going to need this money in 2, 3, 4, 5, 6 months or years, then probably investments is not your field. So you have to find another source of income and another way to get wealthy, maybe through real estate or bonds or something that you actually are passionate about, like I am about stocks and cryptocurrency. And let's not forget the DeFi sector that's now emerging out of the cryptocurrency field. The DeFi sector is actually one of the biggest opportunities of the decade. DeFi is now like buying Bitcoin or Ethereum in the first 2 to 3 years. If you want me to make a video about the DeFi sector, just leave me a comment and I'll go through that. So the best thing that you can do if you want to invest is to buy shares and hold them of medium to long term, and that means 10, 20, 30 years, and I can guarantee you this because historically speaking, no one could have found himself in a worse position than before after investing consistently. You are definitely going to be better off in more than 20 years. This is not financial advice, but this is what history tells us. So, as I like to say, you do you, I do me. Personally, I'm going to invest into high dividend shares such as AbbVie, AT&T, Coke, and diversify them with the new position that I have started this year in green energy stocks. The green sector is going to grow exponentially now with the Biden administration, and I think that this is a tremendously good time to take advantage of such an opportunity for ourselves. So act like an intelligent investor and do your research before you buy your shares. And don't forget, don't buy if you need those money. You should invest an amount that you afford to lose and you are not going to need. You simply have to put money into the preferred stocks, you hold, and you cash out over 15-20 years. I can promise you that you're going to see an insane ROI. For people new to finances, ROI is translated as return on investment. So let's say you're going to buy $100 stocks worth of Next Era Energy, and by 2040 you're going to see an increase of 200%. That amount is going to represent your capital gain, and until that point, depending on your jurisdiction, of course, you're not going to be taxed on that because it's not a realized profit yet. Once you cash out, you have to declare the profit and pay your taxes. But you're going to see insane gains. I guarantee that. Only if you respect the previous rules that I have just shared with you. Again, not financial advice, guys, and I do me, you do you. And because of this, if I were you, I would have smashed that like button and subscribe. Just ruin that like button because it simply tremendously helps the algorithm and it encourages me to keep going with such videos. This way I show you that I care about the materials I'm posting on YouTube, and I want to take into account your opinion. So just hit the like button, it takes only 1 second and you're going to get more free information in a summarized version. Historically speaking, the stock market performs very well. But again, on a long term, let's remember about last year's crash. I opened my brokerage account and I just saw 34% minus. 34%. That's an insane loss. You know what I did? If you watch me, you should have guessed that I didn't panic, I didn't FOMO buy. I reacted according to my plan. I waited my deadline for that month and I just kept investing money. Hopefully the facts came into the play and we got saved. The stock market recovered quickly in about, I think, almost 2 months, if I remember well. And then we went through an amazing half a year. This is how I kept investing, respecting my rules, and I got at the end of the year a ROI of 23.5%, 23+%. And that's more than double than the S&P 500 actually does throughout the year. One of the best years of it. Usually the S&P 500 performs like 7%. How I've done that? I didn't panic sell. Did not care about what's going on. I ignored the news. I just cared about microeconomics. Macroeconomics are important, but not for personal investment. As a side note, I have to say that I woke up, I ignored the news, and then I got calls and messages that we are going to experience a bear market. A bear market is when the stock or any market crashes about 20%. I thought that it's just a correction, which is translated as 10%. But midday, it pretty much looked like a bear market towards a really great recession, a financial collapse, almost depression. But it was really short, and the market recovered because money got pumped. I still think it's going to be correction actually, and I think what we are actually experiencing is like in crypto, pump dump consolidation, pump dump consolidation. So now we pumped a long time, several months, and now we had more than a dump, a correction. We went below the threshold, the support line. Financial institutions probably bought shares and stabilized the price, and now we are going to see probably a consolidation before we restart the bull market. I say this because I went on red today, but after a couple of hours I got back on green. It's not a sufficient green light yet, but it's definitely better to be on green than on red. So just remember, make an emergency fund, don't panic sell, don't FOMO buy, keep your strategy, invest long term, be prepared to lose your money, but you won't. So stay chill, because if you follow the rules that I have just mentioned, you're going to be really well. And try to keep a steady income. Finally, just remember this to hunt you every single time you look at your portfolio. Time in the market beats timing the market. Repeat, time in the market beats timing the market. But you do you, I do me. Now that's all for today, guys. Thank you so much for watching. Please subscribe and hit the like button. In plus, feel free to leave me a comment. I'll go through it. I promise I will reply and take into account your ideas for the next video. Till next time!